Welcome back, mindful investors. So last week I had a great chat with my friend Alesh. It was like a 90-minute chat all about dividends, but I'll save you some time and just share the valuable snippets. Here it is.
I think if somebody was starting out, I wouldn't even suggest for them to aim for dividends. I would suggest for them to grow their net worth and grow their portfolio, which I think is best done with growth stocks. I think I would just start with indexes until, I was at whatever critical mass, like we were talking a million.
This was a head scratcher for me because all this time I know in Alesh, he keeps talking about dividend stocks. So I assumed that if he was to restart everything, he would just start the snowball as early as possible and grow the dividend snowball that way. And after reflecting a little bit, that's exactly what I've done. Like I mentioned before, I started the dividend portfolio about 5 years ago. I never owned or looked at a dividend stocks before that. My first 8 to 10 years of investing is all about growth. And by growth, I don't really mean the penny stocks that I'm shooting for the 10x from. I'm buying the blue chippers, but using option strategies to eke out the extra profits. Now here comes the fun question. Why am I even starting this dividends portfolio? I think there are two major reasons for me. Number one is for that passive income, right? So you just park a certain amount of money, get those shares, and then it'll return you dividends for you to buy more shares and then work that snowball that way. It's kind of like a safety net as well, because we know that if we built up that snowball, pretty much no matter what happens, we'll get paid out. Let's say for my $1 million target, if I get a 4 to 5% yield, then I have the $45K a year. By controlling a burn rate under that threshold, we can comfortably live off that and explore other opportunities in life. And here's the second part. Let me switch to the iPad. As always, we'll start off with an axis. So here's a Y, here's an X. Okay, I mentioned that I started off with the growth stocks, right? So for growth stocks, we embrace the volatility. The volatility can swing like this. That's typical. And hopefully, the end point is higher than our starting point. Even if we dollar cost average every single month or so, hopefully, all these points will be lower than our final destination. So here comes my second reason, lowering the variance. If we go back to the iPad example, for dividend stocks, we don't expect this kind of ride. Hopefully we get something like this. That just wavers across almost flat. But the general trend is going up. And one of my requirements for these dividend stocks is that they grow in the dividend payouts every single year. Now with these two portfolios in place, we have blended the volatility together. So we will have this blue line that meets in the middle somewhere here. When you have more of a balanced portfolio like this, you can sleep better at night because we're not always riding this roller coaster in the green line. We can sleep at night knowing that our whole portfolio won't tank 50% overnight. It's just to buy that peace of mind.
Okay, I'm ready to leave my job and now I want to have passive income. Now you wouldn't want to do it all in 1 year because you probably had a whole bunch of capital gains at that point, so you might want to spread it out over 3 years. But I would start converting those index funds or ETFs into dividend payers.
Another question to ask is, when should we start this dividend portfolio? In the case of Alesh, he pretty much initiated the process when he decided to leave his job, and maybe a couple years before that because it takes time to migrate things over. And as he said, we don't do it all at once. Let's say if you have that growth portfolio to $1 million, we don't automatically convert it into a dividends portfolio. That'll just incur the max pain in taxes. The time frame is unique for every investor. For my example, I chose to build this dividend snowball over 10 years. It's possible that if I sell all my growth stocks tomorrow, I can load up this dividends portfolio and meet my $1 million target. But I wouldn't want that. I want more growth at this time. It's kind of like how Alesh has it. Even though he's got a $3 million portfolio, only 1.2 is in pure Canadian dividends. So my portfolio will kind of remain balanced that way. Like maybe it's 70% growth and 30 dividends right now, but as time goes on, it'll spill over. This 70-30 will slowly become 50-50 and possibly become 30-70 the other way. Because when I get older, I probably won't be as active in the market. I would probably focus on different things in life than just looking for the next home run play. So let me know the answers to these two questions. When did you start your dividend portfolio and why did you do it? As always, thanks for watching, take care, and I'll see you in the next one.